Yeah. Hello traders. This video is probably the most honest video I will ever make about trading because I'm completely broken now and I lost two funded accounts in a row, which I was struggling to buy each of those because I'm just studying it. I'm not earning or going to job, but buying a one funded account will means a lot to me. And then in a row, within 1 hour, I just blow two funding whips account. Okay. I'm not making this video to show profits, Lambos, or some fake trading lifestyle. I'm making this video because recently I believe multiple platform accounts and I realized something important about trading that most people will never talk about. The truth is, losing accounts is painful, not just financially but mentally because if you lose account, you can buy another one. But if you lost if you lost an account, it will affect your mentality. Then you start doubting yourself, you start doubting your strategy, then you start thinking maybe you are not meant for this. And it is a stage where most of the traders were step out of this trading and they quit trading. And that's exactly where I found myself. I had a multiple funded accounts, and one day something really stupid happened. I had several accounts logged in. One account was near drawdown, and I misunderstood an email thinking that account had already breached. Because of that confusion, I took a trade on the wrong account, assuming it was already gone. That mistake alone could have wiped everything out, and that moment forced me to stop and really look at what I was doing. But if I'm being honest, the problem wasn't just that mistake. The real problem was deeper. I was not trusting my own analysis anymore. Instead of reading the charts myself, I started watching signals group. I will look at Telegram channels, wait for someone else set up, and execute the trade. If it wins, I will get FOMO or I will enter off that even the trade running 50%. I will enter that again blindly. Then I will get some profits. I will lost only. I didn't make profits from those signals because of that risk management or execution. Because this is one of the most dangerous things a trader can do because when you follow signals, you are not actually trading. You are outsourcing your decision making. You don't control the risk. You don't fully understand the reasoning. And when the trade loses, you feel even worse because you didn't even believe in the setup in the first place. That's when I realized something important. If I want to survive in trading, I cannot dependent on signals, random strategies, or consistently jumping from one concept to another. I have to master one market, one strategy, and that's all every trader needed and every trader has gone through, right? So I made a decision. From now on, my focus is one instrument only, which is gold. Gold is one of the most traders market in the world. It has high liquidity, strong volatility, and very repeatable patterns. But when you watch gold long enough, you start noticing something interesting. Gold rarely moves in a straight line, very rare, because it's the most traded instrument in the world, right? So it rarely moves in a straight line. Instead, it often takes liquidity first, right? Or it will sweep some of those levels. Price will push above the previous high or previous low, trigger stop losses, and then reverse. Or it will sweep a previous low, trap breakout traders, and then move strongly in the opposite direction. Right? You can see here breakout traders, then price will move there. This behavior is what many traders calls liquidity sweeps. At the same time, gold has a very clear session behavior. During the Asian session, the market is usually slower. But when the London during the Asian session, wait, let me show which is the Asian session and London session. See, Sydney, Tokyo, you can see here clearly. The Sydney and the Tokyo was the Asian session. During the Asian session, the market is usually very slower, but when the London session opens, the market is very volatile. Yeah, you can see. Wait, this was just a Tokyo session running, and another in 30 minutes the London session is opening. And even when the London overlaps with the New York session, the volatility increases dramatically. That's where the real move happens. So instead of chasing some random trades, I started studying how gold actually behaves. What I noticed is a pattern that repeats again and again. First, the markets builds liquidity. This happens when equal highs or equal lows form or when price approaches previous session levels. Second, the market sweeps the liquidity, right? The price quickly spikes above or below those levels, triggers stop losses, triggers stop orders. Third, a strong displacement candle, right? A large momentum candle pushes the price in the opposite direction. Fourth, a price pulls back slightly into the body of that displacement candle. Finally, the market continues towards the next liquidity zone. This sequence appears over and over again for the past full trading journey that gold has in that chart. S- So instead of chasing high win rates, I decided to build a system that focuses on asymmetric reward to risk. Sorry, reward to, yeah, asymmetric reward to risk. That means I'm not trying to win every trade. In fact, my win rate might be only around 30 to 40%. But every winning trade will aim for a reward at least three times larger than the risk. For example, if I risk 1 unit, my target is 3 units or even 4 units or even 4 units. You can see here, right? That means even if I lose six trades and win only four trades, the math still works in my favor. The key idea is simple: small losses, larger wins. So here is the structure of strategy I'm building. First, I determine the higher time frame in the 1 hour chart. I look for a basic structure: higher highs, higher highs, higher lows in the bullish, or lower highs, lower lows, lower highs, lower lows for a bearish markets. Second, I mark those important levels, liquidity levels such as the previous day's high or previous two days low or equal high, equal low, or the Asian sessions high and low. Third, I wait for the price to sweep those levels. Then I wait for, this is where the market triggers stop losses and trap traders. Fourth, I look for a displacement candle. Here you can see this displacement candle. I want to see a strong momentum that shows buyers or sellers stepping in aggressively. Fifth, I wait for a pullback to re-enter into the place. Here the price has re-entered there. Then we will enter the trade. We will place the stop loss here just below the equal low. Then the profit will be the previous high profit target. That's where the entry happens. The stop loss goes beyond this sleep level and the target becomes the next major liquidity level. I'm not trying to predict the entire market. I'm simply reacting to what the price is doing. Another important filter is time. Most of the strongest moves in gold happens only during the London session and the London New York overlapping session. So instead of staring the charts all day, I focus on those windows where volatility is highest. But strategy alone is not enough. One of the biggest lesson I learned from blowing account is the risk management. Risk management is the key to pass those funded accounts. From now on, my risk per trade will be stay small, which is around a 1 to 2 percentage. I will not take more than two trades per day. And if I hit a certain daily loss limit, I stop trading. No revenge trading, no emotional trades. Another major step in my recovery plan is backtesting. Backtesting is the key that you can understand or you can even predict how your strategy works, how you work in the market like that. I want to see the behavior repeat with my own eyes because before testing any strategy, I am going back through historical goal charts and collecting at least 30 to 50 examples of this pattern. Because confidence in trading doesn't come from watching someone else's signals, right? Confidence comes from seeing a pattern play out again and again through your own research. So that's the new path I'm talking. One market, one strategy, one concept, consistent risk management. I'm not chasing perfection. I'm building a system that survives consistently. And if you are watching this video as someone who has blown accounts, lost confidence, or doubted yourself as a trader, I want you to understand something. Almost every successful trader has been in that position. The difference traders between traders who eventually succeeded and those who quit is not intelligence, it's persistence and discipline. The market doesn't care about how you feel, it only rewards your consistency. I can say that again, the market doesn't care about how you feel or how much you make. It only rewards your consistency and risk management. This is the beginning of a new phase in my trading journey. Not chasing signals, not chasing any strategies of someone else's, just mastering the market one step at a time. And if you want to follow this journey, learn from the mistakes I make and see how this strategy evolves, make sure to stay tuned because this time the goal is not hype. The goal is the real growth that should make me from making mistakes or something else to become a profitable. What are the things that it can takes to become a profitable trader, right? That's where I'm focusing on. So people don't give up on some of the small emotions or that mistakes. We can recover it. Just keep doing things, whatever you are doing. Maybe it's where the middle of the place you are dreaming of, right? I just saw this quote today. Don't quit because the journey can be just in the middle you have survived. Just a small steps ahead. Go on through the journey. Don't give up. All right. Okay, guys. Thank you. See you in the next video. So stay consistent. Even though stay consistent, just do a back step. Yeah, I had learned, sorry, I have made many mistakes, so don't do that mistakes anymore. First of all, don't follow any other signal channels. If you have like any of those channels, just unfollow, just leave that, leave that channel, just block them. Try your own strategy, whether it passes or fails, whether it gives the TP hit or SL hit, whatever it is, try your own. Or if it SL, see why it did sell. If my strategy is wrong or the market is volatility, whatever it is, just see, look, you can win. That's it. Thank you, guys.